Hello, hello, and welcome back. After Alibaba had a great day yesterday, something needs to happen in order to bring the stock price down again, right? And so we're having some news that I'm going to be talking about. Not really news, frankly. It's just pretty much what is causing this decline here. Of course, it's also the market crashing overall today as well. But JP Morgan, also an analyst, which is great at bringing the stock price down for no reason, he actually came out with a reiteration of the stock price, and let's examine what that was. You will see here that shares dropped actually almost 3.5% right now in pre-market trading is when this article was written. After JP Morgan analyst Alex Yao said he turns cautious pretty much on the China-based e-commerce giants fiscal second quarter revenue outlook, citing weak China consumption, as if we didn't know about this. Yao reiterated the overweight rating on the stock, but cut the price target to 135 from 145, which is insane because the stock price right now, actually, when this was written, was like 80 bucks. And as you can understand, this would be a reason for it to go up really and not down based on the stock price target over here. Yet it's still going down, and it's down about 4%. Now remember that we're potentially looking at Chinese banks buying back quite some stock here from Alibaba and other Chinese companies. So this is a prime opportunity for dropping prices a little bit. Now you will see though that some articles here are talking about Alibaba and how nothing positive is left, and I kind of love to see these kinds of articles here because when something of this sort happens, we are looking at more and more bearish stances here, and at some point, when everybody has sold out of Alibaba, things are going to start getting better and better and better, and we will eventually see a price increase, that's for sure, because the business is pretty awesome and pretty cheap, insanely cheap, based on what it is and has been doing in the past. Now you will see some things here which are kind of a weird thesis in terms of the investment for Alibaba. And what you will see is that the article is talking about the capital allocation strategy and whether it was a failure. During fiscal 2022, Alibaba deployed almost 10 billion to repurchase shares at approximately 160 per share. Then in fiscal Q1 2023, they deployed a further 3.5 billion at $90 per share. And as you can understand, this author here claims that because the stock price is sitting at 78 with no signs of abating its sell-off anytime soon, he's pointing out that it may have been a waste of resources. But the thing is, of course, this is hindsight 2020. And even at $160 per share, Alibaba wasn't expensive to begin with, or at least it wasn't that expensive. And of course, buying back at $90 per share, I'm definitely in for that. That's a very, very good price to be getting Alibaba for. And so this kind of repurchase here, I'm all for it, and I would actually repurchase even more if I were Alibaba. 160, I think it's still a fair repurchase for Alibaba, but of course 90 is insanely better over here. So I do like both repurchases, frankly, and I definitely don't think it's a failure. Of course, anybody can be sort of like an oracle with, things that have happened in the past, I suppose. But, if you didn't know what Alibaba would be doing when the price of the stock was 160, buying, I think, is a very, very fair thing to do back then. And so right now, after we're seeing it dropping, you can say all sorts of things about how that was a bad move. But again, that's hindsight 2020, and you cannot really know that. Now, you will see that the Baba stock valuation is 11 times this year's EPS. Of course, it's actually lower right now, and it keeps dropping, which is insane to me. And this is one of the reasons why I love Alibaba over here. And if I wasn't full on my portfolio, because I don't really go more than 5% on any single stock, and I'm full on Alibaba right now, I would definitely be buying more here. I may even think about potentially adding a little bit more. I really, really don't want to go over my limits, but this one is so cheap, and I think it's gonna end up being a massive win eventually, that I may think of adding a little bit more, especially if it keeps dropping. And yeah, the bottom line is pretty much talking about the company being negative right now and how it's a risk and things of that sort. Now, another couple of interesting news here that haven't been known because it's all negative right now. We have some great news from Alibaba and peers as HSBC finds the sector promising, and I definitely agree with this one. Found the outlook of some Chinese industries from the internet to property has turned brighter. And of course, I definitely agree with this argument here for sectors over here, and include the internet firms with better than expected earnings growth, developers to win from significant industry consolidation, renewable firms blessed with favorable policies, and consumer goods producers that benefit from demographic shifts. And you will see here that even though things are generally speaking getting better in terms of what we are looking forward in regards to Alibaba, like for example, we're looking at having the audits happen very soon actually, and we're looking at the Chinese government starting to actually reduce its intervention. At least lately we haven't heard a lot about that. So it looks like we're getting to a territory where things could reverse quickly. Now, I don't know whether that's going to be quick, of course, because it could still take a while, and it does seem like anything is going in order to keep the price low for a while. And we'll see what's going to happen. But slowly we're getting some interesting news pieces here, which are pointing to a rosier outlook. Another one over here, Alibaba prices attractive, CDC's potential for shares to rally 70% plus. Definitely agree with this sentiment over here. Again, you won't be hearing about this one because, again, we have to be in negative territory right now. A city analyst cut the price target on Alibaba to 141 from 154 to reflect lowered multiples. But again, even though you're looking at a cut here, this is a much higher price than the current one. It's almost 100% more actually than the current one. So as the article points, it's more than 70% over here. However, the analyst remains bullish on Baba stock given low expectation and near historical through valuation. And that makes a ton of sense because, again, the stock price matters a ton. And with the stock going that low, the business becomes more and more attractive. And of course, the stock is also becoming more and more attractive here. And what the analyst is saying here, the analyst has also reflected positively on the company's efforts to reaccelerate growth and offset losses from the challenging microenvironment, for which we have talked about. The company didn't have an awesome quarter, actually had a bad quarter actually earlier, just because of some investments going south, because of China, expected stuff, frankly, nothing out of the ordinary. And this is why we got it at a better price. Thanks to Baba's effort to enhance shopping content recommendation and improve delivery experience, its ability to deepen consumer wallet shares in higher spending users helps offset consumption cutback by lower end customers. Increased EBITDA consumption, reflecting continued optimization of investment spend in strategic initiatives. So we're gonna see what's gonna be happening. And now Alibaba again down today after a great day yesterday. It's pretty much giving back all the gains. But if you take a little bit of a look at what is going on right here with the stock price, again, hammered today as well, sitting at 78 bucks, and taking a look at the 5-year outlook, you will see that it's going down and down and down. But you'll see that the price to free cash flow is sitting at 9.3 over here. And the price to earnings ratio has been pretty much rather high because of the last pretty much year bad earnings, which won't be continuing for a while. But I wouldn't pay too much attention on this one. The company has been buying back shares, it's super solvent, and is growing greatly through the years and keeps growing and making some good free cash flow, great free cash flow actually, great balance sheet. Pretty much everything looks fair here and nice for the company, apart from the fact that they have been battered lately, battered down because of what has been happening with China. Remember, for a while the company basically wasn't allowed to operate. And there were crackdowns, there were lockdowns, everything pretty much to destroy Alibaba's chain of operations here. And so, as this happened, and the sentiment still remains, the stock keeps going down for a while, and it opens up to some fantastic entry points here. Like these prices, I think they are insane, frankly speaking. And again, I may be even looking to readjust my ceiling here and maybe add a little bit more to my portfolio. And if you take a look at our stock evaluation tool, we can kind of see here, and I'm kind of wondering, reaching that low of a price, what happens if I go like 3, 5, and 7 here for growth for the company? What's gonna be happening? And their margins are typically a little bit higher than what has been happening lately. Let's actually go lower though. Let's actually go 13 over here, 15 and 17. But I think the company is gonna be significantly lower eventually in terms of margins. They may be hurt for a little while, that's for sure. But remember, they have been hurt mostly because of what has happened last year. That's not the norm. In terms of the free cash flow margin, where I'm going to go at 90, 100, 110 here, and 13% for my annual return. And I'm kind of curious to see what I'm getting out of this one. Yeah, and even with a 3% revenue growth and a 13% net income margin, this is solidly green over here. What about 0% revenue growth with these kinds of metrics? Again, still in the green, which is insane. Not growing at all with a very low margin here for the next 5 years. It's still solidly green here for achieving a 13% return. So it's an easy buy for me, no doubt about this. And yeah, I do understand that the sentiment keeps being low and the stock could go lower potentially. Who knows? I don't know. But the thing is, this kind of price is insane. And yeah, I would definitely be buying this one right now if it wasn't in my portfolio already. And I think my cost base is near 94. I may look to lower it a little bit. We'll see. But thank you for watching. Hope you enjoyed. And let me know what you think about Alibaba. I'll see you in the next video, guys. Bye bye.